You can get the exact playbook for an 8-figure exit tailored to your business, handed to you for free on a silver platter by doing this. But before we jump into that, my name's Matt Bodnar. I'm a private equity investor, former Goldman Sachs and Forbes 30 Under 30 alum, and I've done more than $100 million worth of deals. I talk to business owners all the time who dream of having a huge 8-figure or better exit for their business. But most of them have no idea what their company is worth or what actually drives big business exits. Here's the secret. To have a big exit, you have to start with a buyer. Understanding what big buyers are thinking and what they want is one of the most important things you need to do to drive a big exit. What if I told you that you could have a team of highly paid Ivy League MBAs ruthlessly break down your business and give you a game plan to get it to an 8-figure or better exit for free? The big caveat is that you have to set your ego aside because they do not care what you think and they vote with one thing that has zero regard for your feelings: their money. There is no better free consulting for your business on putting an exit roadmap together and figuring out exactly, step by step, what you need to do to achieve an 8-figure or higher exit than talking to the kind of buyers who would pay 8 figures or more for your business. When you talk to them, one of two things is going to happen. Either A, you'll sell your business to them at a price that you're excited about, or B, they'll either offer you less or they won't want to buy your business. And here's where the magic happens. This one question can transform your conversation with these buyers. Ask them, what would you need to see to pay me 8 figures or more for this business? And here's the crazy thing. They will tell you exactly what they're looking for. The hard part is not getting the playbook of what you need to do. The hard part is setting your ego aside and listening to the feedback from the market. Now, you can go do that for one buyer and have some great ideas and things you need to do to improve your business and its exit value. But why would you stop there? If you talk to 5 buyers, you're going to have 5 times more feedback. And you can look for common themes as a way to prioritize the biggest and most important things to do first to improve your business and position it for an 8-figure exit. This dead simple approach is what most sellers are missing when they try to hit a big exit. Not only do you get all the free consulting from the big buyers, then you reverse engineer your business to match what they want to buy. You don't need to guess. You don't need to figure it out on your own. They will tell you exactly what they want. Another amazing question that you should be asking buyers to figure this out is, what do your ideal acquisition targets look like? This is great because it tells you exactly what buyers are thinking and what they want. If those things don't match up with your current business, then you know definitively what you need to change to make it enticing for big buyers. Here's another question that can yield huge insights when talking to a buyer. What did the companies that you paid the highest multiples and highest prices for have in common? Stop making everything so hard on yourself. Instead, you can literally get the playbook for an 8-figure exit handed to you on a silver platter from these buyers just by talking to them. Ask buyers what they want and then reverse engineer it in your business and give it back to them. It's actually pretty simple, but it's definitely not easy and can often require some big operational changes to your business. Now, I can save you a bunch of time on figuring some of this out because I've already had lots of these conversations with lots of big buyers, dozens and dozens of them, and I talk to them regularly across many different industries. Why? Because I'm using these same strategies for my own portfolio of companies that I own and invest in. Here's the thing. I want to let you in on a little secret. A lot of the things buyers are looking for are the same regardless of industry. I hear the same kinds of things over and over again. Here are the 5 biggest things I've seen that buyers love and are happy to pay 8 figures or more for. I'm going to save the most important one for last to make sure you're paying attention. First, customer diversity. This is huge. Even large, fast-growing, successful businesses with a single customer are a massive risk and something that a ton of buyers will run in the opposite direction from. I've seen awesome companies that were crushing it, literally doubling their earnings annually, that buyers wouldn't touch because they were highly concentrated to a single customer. Buyers want to see big diversification in customer base, and the more diversity, the better. Second, Buyers are looking for growth. Nobody wants a business that's dying or a melting ice cube. Buyers will pay up big for growth, and they will squeeze your valuation down if you're flat, stagnant, or not growing at all. Third, management. Nobody wants to buy a job. They want to buy a well-run business that operates without needing the owner. It will crush your ability to sell your business if the entire business is dependent on you. Those kinds of businesses are called dancing bears because when the bear stops dancing, the money stops coming in. Some dancing bear businesses are completely unsellable, and even the ones that sell end up trading for much lower prices than they would have if the business didn't rely on the owner. If you want to sell your business because you're aiming to retire or do something else, but the entire business is dependent on you, worst case scenario, buyers will just move on to the next deal. Best case scenario, they might do a deal with you, but for a lower valuation, and they'll lock you up with golden handcuffs for years and defer the bulk of the payments from your deal over time to keep you locked in. If you're gunning for a big 8-figure exit, this is one of the key things you have to solve for. The fourth thing buyers want to see is operational excellence. Buyers want to buy well-run businesses, not operational messes. I'm talking about clearly documented systems and processes, defined standard operating procedures, predictable and proven sales and marketing methods, clean, preferably audited and timely financial statements. The stuff sounds boring, but these are the things that buyers care about. And if your operations are a mess, you're not going to be positioning yourself for a big exit, and you're going to turn off some of the biggest buyers. All right, this last one is probably the most important driver of big exits. I'm just going to be honest with you. There's no way around it. Size does matter a lot. This is the big daddy. In fact, it kind of trumps all the other things. You can have a company with none of the above things, but if it's doing 10 million in EBITDA, it's probably going to sell for 8 figures or better. If you have the same company doing all of these other things, but it has 200K of EBITDA, probably would sell maybe in a best case scenario for $1 million, which would be about 5 times its EBITDA. Big buyers are looking for big companies, and the bigger the company, the higher the price it commands. Here's something crazy. I want this to really sink in because it's wild. It's not just that big companies are worth more by a sheer factor of being bigger. It's that they're actually more valuable, and that multiple is applied over a bigger number, which means the value increase is exponential as a company gets larger. I'll show you what I mean. Let's say you have a business doing 500K in earnings. That business on a good day is probably worth a 4 times multiple, which would be a $2 million valuation. If you took a company in the same industry doing 5 million of earnings, it might be worth a 9 times multiple, which is a $45 million valuation. Now, here's the crazy part. The earnings obviously go up, but so does the multiple. The earnings went up by 10 times from 500K to 5 million, but the valuation went up 22.5 times, more than double because the multiple got bigger. Bigger companies are not only worth more because their earnings are higher, but they're also worth more because people pay more for bigger companies, even after you account for the fact that they have more earnings. That means the bigger your company gets, you get a double boost to your valuation. Once you start getting above 2 million or more in earnings, that's when the big buyers really become interested, and that's when you can truly command an 8-figure or higher exit for your business. The things I've just covered are some of the most impactful things you can do to attract big buyers for your business. To start, talk to buyers and get a free consultation from these highly paid Ivy League private equity firms on what you should do to improve your company and what they actually want to buy. Then reverse engineer that into the plan for how you're going to improve your business. Remember some of the biggest things that buyers want to see. Customer diversity. Lots of customers is better than 1 or 2 big customers. Growth. People want to buy businesses that are on a fast growth trajectory. Management. Businesses with existing management teams are much more valuable than jobs, dancing bears, or solo proprietorships. Fourth, operational excellence. Every buyer wants to buy a well-run company. And lastly, but definitely not least, size. The value of your company goes up exponentially as it gets bigger because bigger companies are worth more. Finding the buyers is easy. In fact, if you're an existing business owner, you probably already get pummeled with emails from private equity firms inquiring about buying your business. All you have to do is take a couple of those calls and then get the roadmap from them on what they want to see to pay big bucks for your business. All you need to do is remember these 2 key questions to ask buyers when you talk to them. 1, what would you need to see to pay me 8 figures or more for this business? And 2, what do the companies that you've paid the highest multiples and highest prices for have in common? With these 2 questions, getting to an 8-figure exit is actually relatively straightforward, though it's not necessarily easy. And that's where the nitty-gritty work of scaling a business comes in. But I want to tell you one more thing. There's a strategy that's been proven again and again, and it's validated by detailed industry research from firms like McKinsey & Co., which is one of the top consulting companies in the world, that shows that one of the fastest and most predictable ways to grow a business, even with no organic growth. Do you know what it is? You can probably guess. It's M&A, buying other businesses. If you want to scale quickly, you should be thinking about how M&A can help you get there. But that is a much longer conversation, and I'll save that for another video. The good news is that I do talk a ton about strategies for M&A on my YouTube channel and in my free newsletter. So if that's a rabbit hole you want to go down, check those out. In the meantime, I hope this video has been helpful to you in thinking about attracting big buyers and charting a course to an 8-figure or more exit for your business. Thank you so much for watching. I'd love to hear your thoughts in the comments about buyer conversations you've had in the past and what you've learned. If you enjoyed this video, be sure to check out some of the other videos on my channel where I talk a bunch about buying and selling businesses.